What's really interesting about Bitcoin is that it seems to be repeating the same pattern over and over and over again, where it puts that high in August, it then puts in a low in September, and then rallies into a market cycle top in the post-halving year. Now, the high is not always August. Sometimes it's like early September, but going back to 2013, you can generally see a high in August, a low in September, and then a rally into the market cycle top. Same thing in 2017. You see the rally into the market cycle top after that September pullback. Same thing in 2021. And then, sure enough, once again, we saw the same thing play out.
It's happening again. The charts don't lie. Bitcoin has officially stepped into the 2017 time loop, and if history repeats, we're standing right before the next mega blow-off top. Since 2013, every major Bitcoin cycle has played the same hypnotic rhythm: a euphoric August or early September peak, a sharp dip that shakes out the weak hands, and then an explosive rally into the post-halving year's end. Right now, Bitcoin has smashed through $125,000, flashing the same technical signatures that preceded the 2013 and 2017 parabolic climbs. Momentum is building like a coiled spring, and even brief pullbacks are being bought up instantly, a classic sign of pre-blow-off pressure. Institutional capital is flowing in, macro conditions are turning risk on, and investor sentiment is bubbling just below euphoria. Historically, the most significant market tops tend to occur in the last quarter, making it crucial for traders to monitor price action, especially in the context of past cycle behaviors. The current price of around $125,000 suggests a potential continuation of this familiar cycle pattern, with markets poised for an interesting end to the year. Benjamin Cowen warns, "This is the stage where the market fools most: calm before chaos, silence before the sonic boom." If this pattern holds, we're weeks away from witnessing Bitcoin's next supercycle eruption. History isn't just rhyming, it's replaying in real time. Buckle up. Stay tuned as we bring you more clips from Benjamin Cowen. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
What's really interesting about Bitcoin is that it seems to be repeating the same pattern over and over and over again, where it puts that high in August, it then puts in a low in September, and then rallies into a market cycle top in the post-halving year. Now, the high is not always August. Sometimes it's like early September, but going back to 2013, you can generally see a high in August, a low in September, and then a rally into the market cycle top. Same thing in 2017. You see the rally into the market cycle top after that September pullback. Same thing in 2021. And then, sure enough, once again, we saw the same thing play out. So it's funny because, it always feels like we talk about like this is the most likely outcome, and then everyone does these like mental mind games where like, well, if everyone's talking about it, then it's not going to happen, and then it ends up just happening anyways. So I mean, it is nice that Bitcoin has gone to an all-time high, and hopefully it can go higher. Remember in 2021 when it finally went higher, in October, it was only a sweep of the prior high from April. Ideally, we see more than just that at this point, but I'd like to see some daily closes actually above the prior wick high. We haven't actually seen that yet. So you can see that wick there. We did get a close above, but then the second one we have not. So let's see if we can get some follow through by Bitcoin. The one thing to note is that Bitcoin dominance does continue to go up. So people are slowly getting the memo that liquidity is in fact flowing to Bitcoin. Some people I feel like are, on Twitter, they're like, well, what about Bitcoin dominance? Guys, it's been going up for 3 weeks. I mean, it is moving up, right? It was up 0.32%, then 0.99, and then 1.32, right? It is moving up. It might not be moving up as quickly as you want it to, but dominance is in fact moving up. So we'll see what Bitcoin does. The one thing I will say, with it now being October, is don't be complacent, right? Because as much as everyone wants to believe that this time is different, and as much as everyone wants to believe that it's like a 5-year cycle or something like that, anything's possible. Anything's possible. But the reality is that all major market cycle tops have occurred in the fourth quarter of the post-halving year. And I think it's prudent to just not get complacent about that idea as we progress through the fourth quarter. Now, unfortunately, no one has a crystal ball. No one can tell you exactly the price that Bitcoin will top at, whether it's 125K or whether it's a lot higher. But I will say that some of the things that you can use, like one of the things that you could potentially use is a couple of weekly closes below the 50-week moving average. That's usually a sign that the top is in. So again, that 50-week moving average is now at $101,000. And what you'll notice is that all prior tops were in when Bitcoin got weekly closes below that 50-week moving average. Normally it happens in that post-halving year or sometime in the midterm year. So watch for that. That's usually a sign that the cycle is over. We're not there yet, right? Like Bitcoin is still trending up. It's just something to keep in mind. For now, Bitcoin has bounced off the 21-week EMA, and then it came back down, found a higher low, and bounced again. So we've seen a really nice move by Bitcoin, but again, we want to see follow through. Last cycle, we didn't really get the follow through. Hopefully we can see it play out with a little bit more strength this cycle, but again, nothing is guaranteed. I think the way to think about this is the most likely outcome is top in Q4, right? And with Bitcoin putting in a new all-time high in October, it just kind of like validates this whole cycle theory stuff that, even throughout the post-halving year, here we are, Q4, the post-halving year, and once again, we have a new all-time high. And once again, we have people saying that it's not going to be the quarter where the cycle tops out. Go into it assuming, in my opinion, I'm going to go into this assuming the top will be in Q4, and I'm going to be looking for indicators that'll provide, confluence to the idea, whenever that's in. In the short term, let's see if Bitcoin can get some follow through on this. If you look at last year when it had this like big weekly candle up, it then just continued to accelerate. Same thing in 2023, it just continued to accelerate. So ideally, this week we see that acceleration. If for whatever reason we don't see it, then we'll have to talk about that. Because, by some measures, we already are kind of far along in the cycle, depending on how you measure it. Like if you measure it from the bottom, and you look at where we are right now, it would suggest we're further along than people think, which is kind of a scary thought, right? It would suggest we're further along than people think. In fact, you could already argue that it's gone on longer than last cycle at this point, because last cycle topped after 1,059 days, and we're now at 1,061, 1,062 days. So it's actually already gone on a little bit longer than the last cycle, but the cycle before that lasted 1,067 days. That's if you measure it from the low. If you measure it from the peak, that's a little bit more optimistic, because if you go peak to peak and you compare it to 2 cycles ago, you could say that we're currently on day 1428, and 2 cycles ago didn't top until day 1473, which is basically more than a month and a half, right? So that would actually get you, further into Q4, potentially even getting you into the last month of Q4 if you want to measure it from peak to peak. And if you want to measure it from the halving, ROI after the halving, you can see that we are, 2 cycles ago, it topped about 525 days after. Currently, we're at day 534, but last cycle was day 546. So again, by some measures, we're already further along than people probably think we are. But then by a lot of measures, we're not really close, because a lot of the peak indicators that you would think would be firing off haven't really done that, And so we either have to face the two choices are that we just haven't seen the parabolic rally into the market cycle top, or it's different, and I don't really think anyone here is willing to accept that it's different and that you won't see a more extravagant rally just yet. But again, if you see Bitcoin sometime later on this quarter get weekly closes below the 50-week, that's probably it, right? That's probably it.
Bitcoin recently hit a new all-time high, and traders are watching for real follow-through rather than just wick tests. A healthy sign would be multiple daily closes decisively above the previous wick high. So far, we've seen mixed closes. Bitcoin dominance has been rising modestly over recent weeks, signaling capital flowing back into BTC, even if the pace frustrates some observers. A concrete technical warning to watch is weekly closes below the 50-week moving average, currently near $101,000, which historically have marked cycle tops. Conversely, Bitcoin's recent action shows support at the 21-week EMA, a higher low, and renewed bounces, so momentum is intact for now. Cycle timing can be measured several ways, from the low, from the prior peak, or from the halving, and those methods give slightly different pictures of how far along we are. By some counts, this cycle is already longer than the last, while other measures suggest more runway remains. Let's watch more clips from Benjamin Cowen.
So, unfortunately, we don't have as much to report this week on the labor market because due to the US government shutdown, the BLS is not releasing the data. So, while expectations for the unemployment rate for this month were about 4.3%, we didn't actually get an update, so we don't fully know. With that said, there's other data that came out this past week before the government shutdown, and the Chicago Fed actually released their own estimate of the unemployment rate. So if you go look at what they think the unemployment rate was for the month of September, they think about 4.34%. Okay. And last month, you can see 4.32%. So obviously, we can't fully know for sure like what it was, what it will ever be, because I don't know how long it's going to take to actually get the data for the next data point. But it is interesting to know that 4.34% is where the Chicago Fed has general estimations. If you look at the distribution of probabilities, if you look at the probability of where the unemployment rate would be, you can see the most likely outcome for the Fed, or for the Chicago Fed for the month of September, 28.2%, likely no change. You can see, though, that there is a slight bias to the upside, right? Like it leans more towards 4.4 than it does 4.2, and that's, indicative of the fact that it came in at 4.34%. It's almost high enough to just be rounded to 4.4. So you can see it's definitely skewed higher than going back down. So there's still some softening in the labor market, but still, all in all, it's moving up in a fairly predictable way. I think estimations were 4.3 for this month before they just got taken off the table because they're not going to release it, and essentially this would round to 4.3%. So no big surprises by the labor market in terms of the unemployment rate. If you go look at some of the other stuff we got before the government shutdown, I believe we got job openings early on in the week. So if you look at job openings, they actually went up a little bit from 7.21 million to 7.23 million. So job openings they've essentially been steady for a while, like about a year now. Like if you were to apply a moving average, a 3-month moving average, they're mostly steady. I mean, I guess you could argue it's been going slightly down, but hasn't really moved a whole lot. If you look at job quits, that actually did drop back down to cycle lows of 1.9%. This is something that a lot of people think like if it goes down, it's a good thing. But in reality, if the quits rate is going down, it represents that people are unable or they're not willing to leave their job for whatever reason. Now, we can make up whatever reasons those might be, but usually people are less likely to leave their job if they are fearful that they can't find a new one, or if they have not already been able to find a new one. Layoffs still remain relatively low. In fact, they decreased. They actually decreased last month. So again, the narrative is that the labor market is very, very weak, but reality would say the hiring is weak. Job openings are weak. So if you're a new grad, good luck out there, because it's a tough market. There's not a lot of people hiring. If you have a job, up until now, layoffs are still fairly normal, right? Like they're basically just at pre-pandemic levels, nothing too crazy. which again, you could argue is the reason why risk assets continue to climb the wall of worry. Until layoffs actually start, there's always going to be some reason, for the optimism. We did not get initial claims data this week, but I did want to provide an update because the last time I believe we talked about initial claims data was before the rate cut, and it was when initial claims spiked to 264,000, and we said, let's just hope it's a one-off spike and it comes right back down, and it has. I don't really think there's a major reason to get concerned about initial claims until they're printing 300K. We've had a lot of spikes up, and they just came back down. My guess is that by the time we actually do get a spike up and it doesn't come back down, no one's going to be thinking it because all the prior spikes have come back down. It's almost going to be like the boy who cried wolf, right? Like, there's been so many spikes to the upside that then just get faded. By the time it actually happens, probably no one will actually believe that it's happening, something to think about. If you look at like a map of states where the unemployment rate is rising over the last month, you can see that, there are a few states where it went up, but most of the country is still relatively okay. Now, if you look at over the last 6 months, you can see there's 23 states where the unemployment rate has been going up, but that means there's 27 where it hasn't. And as always, the markets will always look for a reason to be optimistic. They won't look for a reason to be pessimistic, generally speaking, right? Markets go up more often than not. And so when they go down, they usually need a reason, especially if it's going to be a longer down period. And the unemployment rate, right? This is not giving the market that reason, not yet. To give you an idea of what I'm talking about, if you actually look at prior recessions, you can see that, essentially the whole country had an unemployment rate that was rising, right? That's when the market can't ignore it, right? This is September 2008. If you go to, November of 2001, when we were back then, we had a recession as well. When the entire country has an unemployment rate is going up, that's when the market notices, and that's when the market cares. If it's just pockets, and if you play this, right, if you play this since April 2021, now we're in 2022, right, there's always some pocket that is doing okay. It hasn't been the whole country, right? And at some point, if it becomes the whole country, right, that's when you actually have your recession. But that is not what we have seen up until this point. There were, there was some other data released. The only other thing that I definitely want to talk about, I believe, is the non-farm private payroll employment coming out of the ADP, the Automatic Data Processing Research Institute. More often than not, I don't put a lot of weight into the ADP. And the reason is because the market doesn't really seem to have reactions to it in the same way that it has reactions to the BLS data. But when this is all we have, right, when we don't have, the employment level from the BLS, this is kind of like the next best thing. And, what's interesting is that, it has started to roll over here. In fact, the last month, which was previously positive, got revised negative to negative 3K. I think originally it was like over 50K or something. And then this past month is negative 32K. So, back in the summer, we had a single negative month. Now we have 2 negative months. We also had a negative month back in March of 2023.
Benjamin Cowen noted that the Chicago Fed released an estimate for September at about 4.34%, slightly higher than the previous month's 4.32%, and noted that while this suggests a small rise in unemployment, it aligns closely with earlier expectations, around 4.3%. He also explained that the probability distribution around this figure showed a slight bias toward a rate closer to 4.4%, indicating some softening in the labor market. Cowen also discussed job openings, pointing out they barely changed from 7.21 million to 7.23 million, maintaining stability over the past year. He highlighted that job quits declined to cycle lows of 1.9%, suggesting workers are less willing or able to leave their jobs, possibly due to worries about finding new ones. Layoffs stayed relatively low, even decreasing last month, which supports a narrative of a weak hiring environment rather than widespread job losses. Regarding initial claims, Cowen noted that after a spike to 264,000 before the rate cut, claims quickly fell back, signaling no immediate worry unless they rise above 300,000 consistently. He warned that repeated false alarms could make people ignore real trouble when it eventually happens. Cowen pointed out that while some states have rising unemployment, most do not. He contrasted this with prior recessions, where unemployment rose nationwide, suggesting markets don't usually react until the problem becomes widespread. Finally, Cowen said ADP payroll data, though less closely watched, showed negative revisions recently, hinting at some cooling in private job growth. As we wrap up, do you think Bitcoin will follow its usual cycle and reach new highs by the end of the year? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.